begin that, let me request the backend team to play ICI motto.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. I think we have very, very important amendment coming up on Audit Trail, and timely our Audit and Assurance Committee designed this online webinar, and we are very lucky to have worthy speaker Sandeep sir here. And thanks to technology now, the speakers from across India, those who are expert on the subject, we are able to invite to this online platform. Audit Trail. So, we are entering into altogether new era. Earlier, wherever there were errors happening or wherever, entries to be modified, the client, the auditee used to modify those entry, and maybe there were error. If we find out the error during the course of audit, instead of passing a correction entry, a lot of time in a software like Tally, people used to go and modify the entry and give you the, revised details. Of course, there are ERP who are not allowing as of now also to change any entry, and there the corrections, if any, in the books are done only and only through passing the corrective entries, maybe reversal of wrong entry and passing a correct entry in whatever format we call it. Government, by bringing this change, is bringing a revolution, which means the accountant who are maintaining the books of account needs to be most updated, aware about the law, aware about the fundamental of accounting, tax deductions, GST, everything. So that when I pass the entry, the expectation is I'm going to pass correction entries only, correct entries only. And if there are errors, I'll do a corrections. Obviously, the errors I want to minimize, and I also want to eliminate any sort of manipulation which otherwise can happen by changing the entries, changing the books of account. With that, MCA brought in, change in the act, in the rules. And earlier we were told that it will be applicable from 1/4/2021 originally, then 22, and now we understand from 1/4/2023, 1/4/2023, the companies will implement. At the same time, the auditors are going to report that in March 23, when the implementation is not there, obviously, but will they be implementing, and all those issues relating to reporting as well as implementation. We have worthy speaker, Mr. Sandeep sir here. Also, one more biggest challenge is to preserve this audit trail records for next 8 years. In a environment like how we are living, we have to maintain, preserve this data for 8 years is another challenge. Institute day before yesterday came up with a technical guide, basically, which is, implementation guide on reporting of under Rule 11G of Companies Act, which is the rule which is asking us to maintain the audit trail documentation and audit trail entries. While doing the audit of an entity, we are supposed to answer certain questions, whether audit trail is implemented, was it enabled throughout the year, etc., etc. I'm not going into the hardcore subject, but I think we are entering into a completely new era. And we as a chartered accountant again, we'll have to gear up for this amendment which is coming forward on our way. I'm told India is the first country where such changes, such implementation is happening. Usually we used to look forward at other countries and see what are the development. When GST came, we were looking at the other countries where GST was implemented. Now here, this also shows positively that we are into an era where now we are a global leader. So if we start implementing some such important changes, the other countries will follow us. So this is, one more sign that India is emerging as a global leader by taking such a step, such a bold step, and avoiding any manipulation in books of account record, and again, increasing the liability, increasing the responsibility, so to say, upon the auditor. With this opening remark, I'll request our Honorable Dynamic Chairman, C. Arpit Kabra of Western India Regional Council. Sir, I'll request you to say your words of wisdom and something about Audit Trail. Over to you. And also, sir, our current year's vision of WIRC about activities which we want to undertake, and some reporting about, what are things done. I request you to take cover of that. Over to you, sir.
Thank you, Ketan bhai, and welcome everyone. Good evening to all of you. At the outset, let me wish happy Ram Navami to each and everyone. I think it's a wonderful day that we've chosen. I think we all are inspired by Sri Ram, and therefore today we are talking about entering into a different kind of league, as Ketan bhai mentioned, that India is growing. We are adopting technology. We are shifting. It's a significant shift of gears. Accounting, when we talk about the root of anything and everything, is now undergoing a very, very dynamic change. So I think there could not have been a better day than this to adopt and understand and learn. So thank you everyone for joining in. People who are posting their names and membership numbers, you need not do that. We have captured it already. Please understand, your CPs and everything, if at all is available, will be granted to you, just like that only, because you've already registered with us. You've already sent your details before for registering on this program. So please do not post these details. Let the checkbox be empty, and let it be used for interaction with the faculty. That's how we use this technology at WIRC. Unlike other places where you have to register and send your membership numbers, but you need not do it here. Let me come to at WIRC. I have a wonderful council this year. As a chairman, as I've resumed this office, I have Hitesh Pomal sir, a very experienced guy, very seasoned professional from Ahmedabad as a vice chairman. Again, a very young guy, Saurabh Ajmera, who's the secretary. And Treasurer Ketan bhai, as you can see, I mean, with his immense experience, with his immense knowledge, and having worked with for almost like a long amount of time in practice, has a great amount of wisdom with him. Now, what we try to tell you is, what I'm trying to come to is, at WIRC, ICI is going to celebrate its existence of 75 years. We are entering into the 75th year of our legacy. We are as old as the country is. And when the country is celebrating G20, B20s, and watershed moments, I think for us at ICI also, it's going to be a significant moment. As a regulator, as a chartered accountant, as a legacy, we are entering into our 75th year. What I want to demonstrate is, from here to now to then to future, I think if you all want to run, if you all want to succeed, if you all want to survive, and if you all want to really adapt and become a one-stop solution for so many things, I think we need to have a balance like I have in my council. 2 experienced people, vice chairman, treasurer, 2 young people, the chairman and secretary. This is the combination that you should have in your firms. All the senior people out there, I would request all of you to please make space, adopt, invest, and encourage young chartered accountants, because Audit Trail is just a glimpse of what is going to happen in the times to come. Technology is what we'll have to adopt. So it will be very difficult sometimes for us to, take up, adapt, and all of this. Having a young chartered accountant, having a fresh chartered accountant amongst us would make this much more simpler, would in fact increase the synergy with experience and energy coming together. I think we will be able to do a wonderful work throughout the year, and not throughout the year, but prepare for something extraordinary as we all enter into the 75th, the Amrit Kal for ICI. So that is what we want to adopt here at WIRC this time. Important announcement for each one of you. We have come out with our newsletters. Please understand, networking becomes very important for us. Time from now onwards, our newsletters would be a vision, would be an image of what chartered accountants, what WIRC would be. You will have everything in this newsletter. Today, if you go and watch this newsletter, there are menus, drop-down menus. There is a miscellaneous section wherein we have requested anyone, everyone in WIRC. We have come out with a program called as My Role at WIRC. If you want to participate, I have Nilasha madam here, Nilasha Novja madam. She's the coordinator for this program. She's enrolled herself in that program and she's here with us. You could come as a coordinator, you could be an MOC, you could come as a speaker, you could address students or whatever XYZ, whatever you are interested into. If you want to explore, you are most welcome. So in the miscellaneous section, you will find a space wherein you could enter. We are looking out as in more we go and adopt technology. We're looking out for speakers on data technology, on data analysis, on automations, on robotics. We already have, but they are the same ones. We are exploring newer ones and younger ones to come and share their experience on how can they adopt technology. Very soon, we'll be also launching a automation help desk at WIRC. We are inviting people. They'll be there on this panel. And any office, any chartered account office, because I come from a background, I come from a lineage, I come from a theory which says anything which is repetitive, anything which is monotonous should be automated. Now, if you find anything in your CA practice or in your offices which is repetitive in nature and it is monotonous, I think you should automate it. And to ensure you can do it, WIRC will set up an automation very soon and you can reach out to them. It could be use of Excel, it could be use of Power Query, it could be use of anything. Bank audits are coming up next. People who are getting audits, believe me, if you are short of staff, you can write to WIRC that you need people. We will be happy because we have a connect with across the WIRC. We would be happy to suggest you people who could come from different areas. Our branches, for example, Solapur, for example, Ratnagiri, Latur, Nanded, all of this within Maharashtra, Gujarat, for example, we've been visiting there. We have there. There are enough chartered accountants there who actually need exposure, who actually need working. And if at all you believe this networking could help you, we'll be happy. We'll be happy to be the bridge and ensure collaboration can happen in the truest sense. This newsletter will also function for that. You will very soon in this next newsletter, you will find a menu drop down called as networking, a networking space wherein all of your requirements. Yes, yesterday someone reached out to me and said we need a partner in Bangalore because we want to apply for some office work on a big client or a big thing. Believe me that whenever we suggested, there was someone who was hooking up at WIRC from different region. He immediately reached out. I think today they are already having a conversation. Probably they would mature enough if they look into this. I think they could have a partnership. So we want to ensure that that happens. The networking in truest sense needs to be done. And that is why we are launching this in our newsletter next. So anyone who has any requirement can please reach out to us, can write an email to wirc@ici.in and send in their requirements. We would be happy to accumulate them all at one place and put a link of anyone who is interested. So the demands and the resources both would be at one place in our newsletters. We want to ensure that happens in a very, very organic manner. And so these are the steps that we are taking up. Most importantly, pride is what we are launching this year. P is perform, R is relearn, I is innovation, I is the centric of everything that we'll do. And therefore the capital I is the innovation. I also stands for, since I am the I in ICI, I am the I in WIRC, and it is all because of each one of you that we are entering in this legacy profession. D is distinguish, E is enrich, enriching the ecosystem we are working on. I think Audit Trail is one such example that will enrich this ecosystem. A lot of fraud, forensics, investigation, all of these platforms, when we go and work on these, areas, one of the biggest challenges availability of information. Now with this audit trail, I think we'll have a wonderful information system, an ecosystem will develop, and that would help in evolving into a very, very disciplined and an environment that the entire country is looking up to. With these words, thank you very much for joining in. Please stay tuned to WIRC. For any feedback, for any suggestions, feel free to reach out to us. Use this chat box and Q&A to interact. Keep a paper and a pencil handy. If at all something important that you feel you have heard, please note it down so that you could recreate it for yourself while you're working. And last, also the bank audit season is coming in. We've come out with the bank audit booklet, a publication. It's a work of science, it's a work of art, it's a work of technology. Believe me, a book which was 300 pages thick earlier is now reduced to only 70 pages. And believe me, it is real time updated. If tomorrow Sandeep sir says me that, sir, there is a new RBI circular which has come, we need to update it. I need not email, I need not WhatsApp. Of course, all of this would happen, but all I need to do is post it at one place. If you have the book in you, there's a QR code inside for every section, be it LFR, be it advances, be it forensics, be it NPAs, be it whatever norms. You can click that, everything will be on your screen. You can read it, you can recreate it, you can use it. There are checklists, documentation checklists, team management checklist, everything all updated in one word. I think I want to congratulate Ketan Bhai for having done this work very well. People who have not got their hands on the book can reach out to us, can take these books. This book will not only help you for this bank audit, but this book will help you throughout the year for any engagements with bank, be it concurrent audits, be it forensic, be it monitoring, be it anything. So to have an updated information, I think we've also done training sessions using this book as a resource, because everywhere people have their laptops, they have hardware. We don't have to carry it anymore now. With the QR code, everything is in front of them. We have to just explain, and it is all there. It's just like a Zoom platform in everyone's home, in everyone's pocket. So that is how trainings have become very, very essential, very, very fruitful. So with these words, congratulate everyone. I welcome Sandeep ji for a wonderful session. Looking forward to hearing more and more on this. A small little article that we prepared also would be soon be posted in your chat boxes. You can download that. You can use this article and send it to all your corporate clients, to all the clients, so that they can prepare for this upcoming audit season, and will also be helpful for you to ensure that audit trail is maintained in truest sense, because you will be writing that in your audit reports. Thank you.
Thank you, Chairman sir. I think very, very wonderful thought process in executing a lot of activities, and I experienced with him in this 1 month only. The example which he rightly quoted about the bank book, we had a huge size, and I traditionally every time I started updating, he said, let's do something else. And we had a discussion, and now we can see the final product out, wherein, daily basis, Center of Excellence, day before, came up with one Excel utility. We immediately uploaded that Excel utility on the site. So the members can readily go at one place and get entire data, be it, utilities of Excel, checklist, RBI circulars, everything is available. So we are going to try and adopt more and more technology this year with his, expertise in technology. And with this, I request Dilisha Madam, our coordinator, to introduce our worthy speaker, today's worthy speaker, Sandeep sir. Sandeep sir, since we have another program, me and Chairman sir will take your leave with your permission. Also, sir, one question which came on the WhatsApp is this is more going to be challenging for SMPs, especially because larger companies reporting. Of course, the format of reporting and all those things are given in the technical guide which is given. One simple question which somebody posted me on WhatsApp is also, I'm posting it here. The question of one of the member was that, am I allowed to maintain the manual books of account or not? And if I maintain manual books of account, what will happen to the entire audit trail question? This is somebody, generally some member posted, I am not aware he's today attending or not attending, but this question came to me day before. I am, heading over to you, maybe with your expertise You can respond at appropriate time during your speech or at the end of the speech. With this, I request our coordinator Nilisha Madam to introduce our worthy speaker Sandeep sir.
Thank you, Ketan sir. Today is really auspicious day. Happy Ram Navami to all of you. It's my pleasure to introduce before you CA Sandeep Rajaram sir, today's faculty for first technical session, which is on Audit Trail under Rule 311 of Companies Accounts. With CA Rajaram sir has also done certified information system audit. Regarding his expert knowledge, Sandeep sir is a partner with the business advisory practice with a special focus in IT risk assurance. He operates out of Bengaluru and has over 19 years of experience in technology, risk assurance, and internal audits. He has more than 17 years experience working in big fours and large firms. He has successfully led a wide array engagements including IFCFR, SOX, ITGC, process audits, ERP audits, third-party assurance, and data privacy assessment across several industries. He has advised large multinational clients at various locations in India, US, UK, Singapore, and other European graphologists. He has led team in information security audits of large banks and NBFCs. He has worked on several cross-border engagements, including global capabilities centers. Regarding his projects, he is having expert knowledge because he has headed in internal audit functions for renewable energy giants in India and APAC regions. He led the delivered technology assurance, including SOX assessment in India and US for large IT and ITES companies. He managed and delivered shared service centers audits for large UK-based banks. He managed and delivered ITGC, IFSC process audits for large automotive companies. He managed and delivered SOCT and IAE 3402 third-party assurance reports for large IT, ITEC companies. With this brief, let's welcome CA Sandeep Rajaram sir to share his expert knowledge. He's eminent speaker and enhance our knowledge to this auspicious day. Over to you, sir.
Yeah, I think one question. Yes, before Sandeep sir starts, one question where that bank audit book will be available at the counter at BKC WIRC. That book is available for sale. Regarding recording of this program, yes, it will be again available based on discussion with the speaker. We'll announce that post this about the availability of the recording of this program. With this, I hand over the charge to Sandeep sir. Sandeep sir, dais is yours now.
Thank you, Chairman sir, Shri Arpit Kabraji. Thank you to the Treasurer sir, Ketan Sayaji, and a warm good afternoon to all the members who are attending this session virtually. Thank you also for the wonderful introduction by Nilasha. Thank you for that. So I've been a member of the Institute for about close to 20 plus years, having worked extensively in the field of information systems audit, and have seen the evolution of the IS audit over this several years. And as the opening remarks by both the Chairman sir and the Treasurer sir, that this new requirement rolled out by the new company's rules and by the ICA is a trendsetter in a lot of sense. And it's going to be a precedent in the world, right? When SOX came in US, there was no such precedents across the globe. But here we have an opportunity to showcase to the globe, what would be transparency when it comes to financial reporting, what is the accountability with those charged with governance, right? And therefore, this is a significant development that has come by. And I'm happy to share, my views and, how this topic should be dealt with by the members of the Institute. Also, as rightly said in the opening remarks, now we have an implementation guide, released by the ICAI, which gives enough insights into how the requirement needs to be dealt with by the auditors. So without any further delay, we will get started. I will share my screen with the presentation. So what we will cover broadly is the background. What is the requirement under the new company's audit rules and the account rules? We will look at what is the applicability of these rules. What are some of the management and auditors' responsibility because of the rule? And then we will talk about the practical how to implement. How as auditors we need to look at how the clients have implemented and complied with the requirements, and what are some of the reporting responsibilities. So as most of us now know, proviso to Rule 3.1 of the company's accountant rules 2014 introduced a new requirement in 2021 initially that every company that uses an accounting software has to maintain its book for maintenance of its books of accounts shall ensure that the accounting software has a feature of recording an audit trail for every transaction, and that the edit log for each of the change made in the books of accounts, along with date when such changes were made, and ensuring that the audit trail is not disabled. So initially, the applicability of the rule was for the period beginning 1st of April 2021, and this has been deferred for the couple of times, and now it's applicable from 1st of April 2023. So there was the other rule which was relevant for the auditors, which is Rule 11G, which brought in the requirement for the auditors to also comment upon the requirement of how the company has ensured compliance with this requirement, that wherever the company uses an accounting software for maintaining its books of accounts, which has a feature of recording the audit trail facility, and the same has been operated throughout the year. And for all the transactions recorded in the software, the audit trail feature has not been tampered with, and that the audit trail has been preserved by the company as per the statutory requirements for record retention. Now, in the opening remarks, we know that this sort of a requirement does not exist for the auditors across the globe. India would be the first region where such a requirement needs to be fulfilled, and therefore it's quite important that we understand what are the requirements as auditors. How do we test the compliance by the companies to this new requirement? And one of the things, because this is a new topic altogether, this is a guidance that will evolve over a period of time as we apply the requirements in practice, because there could be so many various accounting softwares used by companies. There could be homegrown applications, there could be standard applications, ERPs, smaller applications, so on and so forth. And therefore, it is important that auditors exercise sufficient professional judgment and familiarize themselves with the requirements of the rules and apply it, considering how the company has gone about implementing them. Do they have sufficient controls and so on? So we will talk through some of these points, and as we go through this, if you have any questions, kindly put that in the chat box. We will have some time dedicated towards the end of the session to take your questions. But let me just briefly and quickly address one of the questions that came by, which was that if the companies
Can I just take you 1 minute? Hello. Hello.
Yes, please.
So your voice is somewhat not clear. So can you just see to it? So many queries are coming out from attendees.
Is it any better now?
Somewhat breakable voice. And voice is also somewhat low. So if you can just see.
Okay, is it better now?
It's better somewhat.
Sir, increase
Punit
the
sir,
volume
maybe
of
mic.
Is it
laptop.
better now?
Yeah, Mike, Sandeep sir, if you can keep more closer to your mouth, so it.
Sure. So is it any better now?
Yeah.
Yeah, it's better now.
All right. So let's probably understand what are the requirements under the rules. What is the new requirement in relation to the companies maintaining the audit trail, enabling that feature in the accounting software, and how as auditors, we go about ensuring the compliance with this new requirement. So first, let's understand what are the management and the auditor's responsibilities. So when it comes to the management responsibilities, the company which uses an accounting software for maintaining its books of accounts, and the key word here is books of accounts, shall use only such accounting software which has a feature of recording audit trail of each and every transaction, creating an edit log of each change made in the books of accounts, along with the date when such changes were made, and ensuring that the audit trail cannot be disabled. So this is as far as the management responsibilities is concerned, that the management has to ensure that the audit trail feature is available in the accounting software, that has been enabled, and it has operated throughout the period, who has made the changes and what changes were made, and that the audit trail feature cannot be disabled. Now, the accounting software, there are many possibilities that it can be on-premise application. It may be hosted, outside India. There could be many possibilities that the clients would have adopted to maintain their books of accounts. So one such could be in the current days, where the application can be hosted on a cloud and it can be subscribed as a software as a service model, right? Even in that scenario, it is required that the management ensures compliance with this new requirement. We will probably talk through some of these aspects as we go along, and I can clarify, some of the questions that you might have. As I said, please put your questions in the chat box. I will try and take as much as possible. Then let's also look at what is the auditor's responsibilities. So when it comes to the auditor's responsibility, the auditor needs to comment whether the company is using an accounting software which has the feature of the audit trail enabled, and each and every transaction has the audit trail recorded, and whether all the transactions in the software are covered in the audit trail feature, whether the audit trail has been preserved as per the record retention requirements. We will also see what is the record retention requirements under the Companies Act, and then whether the audit trails have been tampered with or not. So this is insofar as the auditor's responsibility is considered. So any software or system will be in scope of this rule in case the records maintained in such software form part of books of accounts as per section 213 of the Act. So there is a definition for books of accounts. So as far as the accounting software constitutes books of accounts, then this particular rule will become applicable for that. So let's see the applicability when the rule has to be complied with. For the companies, the requirement to comply with the rule starts from the 1st of April 23. And for the auditors, the rule has already, the auditors need to comment even for FY 22-23, whether the company has complied with the requirement of enabling the audit trail feature in the software. Now, this is because there were two rules that were issued by the MCA, while the rule relating to the companies was deferred for 2 years. The corresponding rule for the auditors, was not deferred, and therefore the auditors have to still comment for FY 22 and 23. So there was also a question that came by whether, can the companies maintain the books of accounts in a manual form, right? So when we talk about section 128 talks about the books of accounts of a company being maintained in an electronic form vis-a-vis a manual form, right? So that traditionally before ERPs, before the accounting software came into existence, the books of accounts were kept in a manual form. right? The ledgers, the traditional ledgers, the subledgers, that's how the accounts were written. If the company chooses to maintain, in a non-electronic form, which is a manual form, then the rule is not applicable to them. So the implementation guide clearly mentions that this rule will be applicable for an accounting software which is maintained in an electronic form, which is the books of accounts that are being maintained only in an electronic form. Yeah. So I hope that's clear that this rule will be applicable only for books of accounts which are maintained in an electronic form. And the requirement for companies is across the board, which means Section 8 companies, foreign companies also have to comply with the requirements of this new rule, right? So the account, let's look at some of the components of the audit trail and what is the coverage of the accounting software. So the accounting software should be capable of creating an edit log for each change made in the books of accounts. And however, the auditor's responsibility has been prescribed for transactions recorded in the software, right? So what this means is that first, the capability of the software to record each and every change that is made in the books of accounts, right? That needs to be there in the accounting software. While the auditor's responsibility is to ensure that all the transactions that are recorded, right, what is recorded in the accounting software has the audit trail feature enabled for that. So in case transactions are not recorded in the software, for such transactions, it is not necessary for the software to have the audit trail. So management responsibility for maintenance of books of accounts and other relevant books and papers maintained in electronic mode, and the auditor's responsibility under the auditor's rules will be restricted to the transactions that have been recorded in the accounting software and any subsequent modifications made to those transactions by way of an addition, deletion, right? So this would be the coverage when it comes to enabling the audit trail for the accounting software. Let us talk about the preservation of the audit trails. Section 128(5) of the Act requires the books of accounts to be preserved by the companies for a minimum period of 8 years. And therefore, the audit trail also needs to be retained for a minimum period of 8 years. However, because of the enforceability of the provision, the audit trail retention period will start applying from the 1st of April 2023 and for the subsequent financial years. And therefore, the auditor is required to report whether the audit trail has been preserved by the company as per the statutory requirements for record retention, which is from beginning of April 2023 for a period of 8 years. The auditor is expected to perform certain procedures in the subsequent years of reporting to assess if the logs have been maintained for a period required and are retrievable in case of need. So there are two aspects. One is in the subsequent period, the auditors have to confirm that the audit trail has been retained by the company. And the second would be that these are retrievable. So the audit trail needs to be retrieved if there is a need, either by a regulator or by any of the stakeholders requiring access to such audit logs. So let us look at what then should be the auditor's approach. And let's break this discussion down into 4 stages. How the auditor should go about identifying and what should he or she consider at the time of review, and then reporting, and finally, overall, what is the reporting under Section 143(3). So first is the auditor needs to ensure that the management assumes the primary responsibility, right? It is the management's responsibility to identify the records and transactions that constitute books of accounts. So this is the critical first step which the management takes responsibility for, which is that they define what are the accounting software, what are those that qualify as a books of accounts under Section 213. So towards the end, I do have the glossary of terms. We will look at what is books of accounts under the Act. And those accounting software that constitute books of accounts will be under the ambit of the requirements of this particular rule. And therefore, the management first, as a first step, determines what are those accounting software that constitute books of accounts. And then the accounting software, typically the assessment of the entire IT environment, right? Whether the application, is it a web portal, databases that support the application, interfaces, data warehouse, data lakes, cloud infrastructure. We spoke about the SaaS model earlier, or any other IT component used for processing or storing data for creation and maintenance of books of accounts. All of this will become relevant as far as they are relevant for maintaining the books of accounts, right? And then the management is responsible for the audit trail feature being enabled and making sure that it is not disabled throughout the year. The audit trail captures changes to each and every transaction. Changes including when the changes were made, who made those changes, and what data was changed. So all of this needs to be captured in the audit trail, right? And the audit trail is enabled at the database level if applicable for logging any direct data changes. So let's say the changes to the data, the transaction data, can be through the application, which means in the front end, the client can make a change, or there could be a possibility that some of the users might have access directly to the database and transactions are entered directly into that. So both of such changes need to be tracked and logged. Audit trail is appropriately protected from any modification and is retained as per the statutory record retention requirements. So we will see that some of the controls that management needs to put in place around access protection, from unauthorized changes being made to the data, management has to ensure that the audit trail is appropriately protected and any modification is authorized. And finally, the retention of the audit trail for a minimum period that is mentioned in section 128. Controls over maintenance and monitoring of audit trail and the feature are designed and operating effectively throughout the period of reporting. So it is important that the audit trail feature is designed and is operating throughout the period. So that's the requirement under the rule. And therefore, there needs to be control instituted by management to ensure that they are designed and operating throughout the period. So company would have to design and implement specific controls. Most of these controls typically would be within the IT because we are talking about software and an accounting software. And therefore, it is expected that most of these internal controls would be predominantly IT, right? But these controls are necessary and are required to ensure the compliance with this requirement. So controls to ensure that audit trail feature has not been disabled or deactivated during the period. User IDs are assigned to each individual and are not shared. Changes to the configurations are authorized and logs of such changes are maintained. Access to the audit trail and backup is disabled or restricted, and access logs whenever audit trails have been accessed have also been maintained. Periodic backup of audit trails are taken and archived as per the statutory period specified under 128 of the Act. So we saw that it is important that tomorrow, if there is a regulatory need, the company has to retrieve the audit trails and produce to the concerned stakeholders. And therefore, it is important that those audit trails or the edit logs are periodically backed up as well. Yeah. So again, whatever we have discussed now is typically at the time of identification. These are the initial considerations that management needs to ensure that they have in place so that the accounting software has the required features. They are operating throughout the period. It has not been disabled. There are sufficient configurations. There are sufficient controls in place that have been put by management. They are designed properly. They operate effectively throughout the period. And it is management's primary responsibility to ensure all of this is in place. Assess management's identification of records and transactions where the audit trail needs to be captured and verified on a test basis whether the audit trail has been configured and enabled for the identified accounting software. So an auditor needs to also look at how the management has identified the records. What are those transactions? What are those accounting software? And on a test basis, the auditor needs to test to confirm that those audit trails have been enabled, the configurations are appropriate, and that they have not been disabled. Then evaluate the management's approach regarding the identification of the software, which have been considered for the purpose of maintenance of audit trails. We saw that there needs to be first an inventory of what are those accounting software which constitute books of accounts under the Act, whether management has identified all those accounting software. So one of the critical points that auditor has to evaluate is how management has approached this. Do they have an inventory of all the accounting software? Have they mapped it to the books of accounts? And how did they evaluate that they have a complete listing? Inquire with management on how they evaluated changes that are required for the maintenance of audit trails as part of changes or upgrades to the accounting software. So during the period, there could be many changes introduced. It could be a change in law, and therefore it needed a certain change to be introduced to the accounting software. So how did the management go about doing that change? Was it in a controlled environment? And whether there is enough audit trails available to make sure that those changes that were made to the accounting software are also evaluated by the management. Then where applicable, consider the involvement of specialists or experts in the field of IT. Typically, it requires some level of understanding the IT systems, because the design needs to be looked at, how the IT system is designed to ensure that these audit trails are enabled, what sort of configurations control that. So it is recommended that if it is a complex system, possibly a specialist, say a qualified person who has the required expertise, is also involved in assessing whether the management has complied with these requirements. And in case of accounting software supported by a service provider, management and auditor may consider using an independent auditor's report of a service organization. The independent auditor's report should specifically cover the maintenance of audit trail in line with the requirements of the Act. So as I mentioned a little while earlier, that it is possible that there are third parties involved. The company might have either have the accounting software in a cloud, or a third party is managing that system. And therefore, there might be a need for the auditor to engage with the management and with the service auditor. So the service provider may engage an independent auditor under the SAE 3402 or a SOC 1. The independent service auditor will apply the same requirements and see whether the service organization has also complied with the requirements of this rule, and then includes that in the service auditor's report, which then is given to the management and the user auditor, and the auditor can evaluate whether, in case of a service provider, those audit trails have also been enabled, they are operating throughout the period and have not been disabled. This is an important aspect that needs to be considered. Again, considering the fact that many organizations today would have a third party where the third party will be supporting, either they would be hosting the accounting software, or there will be some level of IT support. So it's important to make sure that in such instances, there is a coverage of all those accounting software as well, because they will constitute books of accounts for your clients. And therefore, an independent auditor's report needs to cover the requirements of this particular rule. Okay. The auditors needs to verify controls such as restricting access to the administrator and monitor changes to the configuration that may impact the audit trail. Typically, auditors will perform ITGC testing as part of the audit procedures, which provides them insights into whether there is adequate restriction of access, whether the changes that are being carried out to the configurations, to the source code, are they adequately controlled, right? So the auditors need to verify these controls, ensuring that such controls exist, and they are operating throughout the period. Auditors are accordingly expected to evaluate management's policies in regard to the test of such controls, determine whether the feature of Audit Trail has been implemented and operating effectively throughout the reporting period. Audit Trail log may generate voluminous data, and thus there may be a need for management to ensure the administrative access to the Audit Trail is granted to authorized representatives to manage the Audit Trail. So the point here is that there could be situations where it might generate significant amount of data, but it is still important for the management to ensure that the Audit Trail feature is enabled, there is an edit log available, and restrict access, administrative access, so that the Audit Trails are not tampered with. The system configuration that controls enabling or disabling of the Audit Trail and whether it was enabled throughout the audit period. We saw this a little while earlier as well. Any changes to the Audit Trail configuration during the period. So did management change any of the configuration relating to the Audit Trail? Are all transactions being enabled for Audit Trail? Has there been any configuration change? So it's important for the auditor to look at this aspect when looking at how the compliance has been achieved in relation to the Audit Trail. And a periodic review mechanism implemented and operated by management for any changes to the Audit Trail configuration. So does management have any sort of a mechanism where they review changes made to the Audit Trail configuration? Whether a monthly review or a quarterly review is instituted, whenever there is a change to the Audit Trail configuration, what was that change? Was that change needed? Was it a requirement of a legal or because of a law that such change was needed to be done? So it is important that management institutes such controls and is made available to the auditor to verify whether there was sufficient control over any changes made to the Audit Trail configuration. Completeness and accuracy of the Audit Trail and edit logs that are generated through the software functionalities. Again, an important aspect, the assertion of completeness and accuracy. How does the auditor ensure that the audit trails that have been generated is complete? That the requirement under the rule we saw is that all transaction, each and every transaction needs to be, an audit trail needs to be generated for that. And therefore, it's important that the auditor looks at controls which gives them assurance that the Audit Trail feature captures all the transactions and the accuracy of the audit log, that it has not been tampered with, it has not been modified by people who had access to it. So the auditor needs to ensure both these assertions. Recorded in the underlying database, whether it captures the user ID that made the change, date, time of the change, and what fields were changed. Again, what were the characteristics of the changes made? Who made that? This is a requirement under the Act, and therefore important that even in the underlying database, all these aspects are covered. So who made the change? When was that made? What was that change regarding? So all of these features are included. And testing performed by management to assess the completeness and accuracy of the audit trail. Again, important. How has the management gained their comfort that the audit trail is complete and nobody has tampered with the audit trail? And review on a sample basis the audit trail records maintained by management for each applicable year and evaluate management controls for maintenance of such records without any alteration and retrievability of logs maintained for the required period of retention. Again, an important aspect that because subsequent years, the auditor needs to look at whether the audit trails have been preserved. It has to be preserved and no alteration should have taken place, right? And therefore, the auditor needs to also look at what are those controls that management has instituted that after the audit trails have been backed up, have been kept and preserved, that no such changes or no alterations are made to the audit trails so backed up. Yeah, again, an important aspect. So let's look at some of the reporting responsibilities of the auditor. We will look at some of these scenarios that is contemplated in the implementation guide because we might encounter as auditors various different scenarios. So we will look into that And as auditors, how do we handle those scenarios, right? So an auditor is expected to evaluate the reporting implication, specifically giving due consideration to SA 250, which is consideration of laws and regulations in an audit of financial statements. So in respect of audit trail, following likely scenarios are expected: that management may maintain adequate trail as required by the account rules. So this would lead to a unmodified report, right? Management does have an audit trail. They have enabled it for all the accounting software, and they have also preserved it, and it is not tampered with, right? That could be the first scenario. The second could be that management may not have identified all records transactions for which the audit trail should be maintained. So it is possible that management omitted some of the transactions. The requirement of the rule is very clear that each and every transaction needs to be recorded. But it is possible that as auditors, when you evaluated the audit trail feature, some of the transactions may not have been, might not be enabled for the audit trail. So that could be another scenario. Another scenario could be that the accounting software does not have the feature to maintain audit trail, or it was not enabled throughout the audit period. So it is possible that the system design itself was such that the software did not have the feature, and therefore management could not enable the audit trail. Or it could also be possible that the management enabled the audit trail only for the part of the year, right, and not for the complete year. So these are the various scenarios that are possible. We will also discuss a bit more in detail what should be the auditor's expected reporting when such scenarios are encountered. So scenarios 2 and 3 mentioned above could result in a modified or an adverse reporting against this clause. So we also saw the applicability of the rule, and here because the auditor is expected to comment for the financial year FY 22-23, which means for March 23, whether the management has kept the accounting software and has it met the requirements under this rule. So because this is not applicable for the company for the current period, so again in the implementation guide there is a clear indication on how the auditor should respond, right? So the auditor will in his report mention the fact that as proviso to Rule 3.1 of the company's account rules is applicable for the company only with effect from April 1st, 2023, reporting under this clause is not applicable. So it's a factual statement that the auditor makes. And mind you, this is only applicable for the current financial year. When this becomes applicable for the subsequent financial years, then the various scenarios what we discussed could possibly be there, and the auditor has to accordingly assess the impact on the audit report. So let us look at some of the illustrative wordings in case of a modified report. So we saw previously that there could be multiple scenarios, especially where audit trails have not been enabled, not operating throughout the period. So what could be typical scenarios and what could be the illustrative wordings? So the first scenario could be that the audit trail feature was disabled for one of the books of account records or for an accounting software. Example, fixed asset software did not have the audit trail. So here could be a scenario where the client has multiple IT applications. He could have SAP, he could have some other software which maintains fixed assets. He could have some other software again maintaining some other aspect of the financial reporting. And therefore, it is important that the audit trail feature is enabled for all of the accounting software which constitute books of accounts. So if there is a scenario where for one of the accounting software, the audit trails have not been enabled. So then what is the suggested reporting requirement for the auditor? So he might mention that based on our examination, the company has used accounting software for maintaining its books of accounts, which has a feature of recording audit trail, edit log facility, except in respect of maintenance of fixed assets records, wherein the accounting software did not have the audit trail feature enabled throughout the year. Further, the audit trail facility has been operating throughout the year for all material and relevant transactions recorded in the software, except for the instance reported below, so on. And then also based on our testing, we did not come across any instance of audit trail feature being tampered with. So therefore, he calls out specifically that for a certain accounting software, which is in this case the fixed asset software, the audit trail was not enabled throughout the year. And for the remaining, he still comments that the relevant transactions had the audit trail feature enabled for it. The second scenario could be that audit trail feature is not operating effectively during the reporting period. And therefore, then the auditor has to comment if there is no audit trail feature throughout the period, except that the audit trail feature of the particular software used by the company to maintain payroll records did not operate throughout the year. Another scenario within that could be except that no audit trail enabled at the database level for application AAA, database SQL, and BBB, database DB2 to log any direct data changes. So previously I mentioned that the changes, the audit trail feature should be enabled at the application level, and there could be scenarios where the changes could be directly made into the database. So if there exists a scenario where the client is able to make changes directly into the database, even those changes need to be captured in the audit trail. So therefore, if any of these is not available during the reporting period, then the auditor has to accordingly comment in his audit report. So those are the two scenarios that are being contemplated here. Accounting software, if maintained by a third party and the auditor is unable to assess whether the audit trail feature can be disabled during the reporting period. So this is a scenario where the third party hosts the application for the client and they constitute the books of accounts. And as auditors, we are unable to assess whether the third party has enabled the audit trail feature or not, right? And therefore the reporting accordingly should be modified. And the illustrative wordings for that is that based on our examination, the company has used accounting software ABC, which is operated by a third-party software service provider for maintaining its books of accounts. And in the absence of, we need to state the type of control report. For example, is it ISA 3402 report or a SOC 1 report? We are unable to comment whether the audit trail feature of the said software was operating throughout the year for all material and relevant transactions recorded in the software, or whether there are any instances of audit feature being tampered with. So this could be a possible scenario and a reporting requirement. Let's look at the next scenario, which is the audit trail has not been preserved by the company as per the statutory requirements for record retention, which means that the audit trail feature is there, but there was a requirement also that it needs to be preserved under section 128 for a period of 8 years. So what if the compliance is not achieved in relation to that requirement? Then the auditor has to modify the report. The audit trail has not been preserved by the company as per the statutory requirements for record retention. And please note that because this is going to be applicable from 1st April 2023 onwards, this scenario is typically to be encountered only year 2 and later, right? It may not occur in your first year of audit. Migration from one software to another happened during the year, or a higher version of the software installed, and the auditor is unable to obtain sufficient appropriate evidence. So there could be a scenario that during the year, the company migrated to a new software, or there was a significant upgrade that was done. Say from SAP ECC version, they migrated to a SAP HANA version. So such migrations, if it happened during the year, and the auditor is unable to confirm that the audit trail was enabled throughout the year, right? He is unable to obtain sufficient and appropriate evidence. So in that instance, the auditor again needs to modify the report. The company has migrated to name the software from the old software, or was it a manual bookkeeping during the year, and is in the process of establishing necessary controls and documentation regarding audit trail. Consequently, we are unable to comment on the audit trail feature of the said software. So auditor in this case clearly says factually that they are unable to comment on the audit trail feature of the said software because they were not able to obtain sufficient and appropriate audit evidence. So these are some of the possible scenarios that could be encountered by the auditors, and therefore all of these scenarios have been covered in the implementation guide rolled out by the institute. I would request members to please have a look at what could be the scenario that could typically, you might encounter in your client. There could be some more of them as you actually in practice implement the requirement. But broadly, it will fit into one of these requirements. If there is any new scenario, I think we will need to still exercise as auditors our professional judgment and see what is the impact of the compliance with the requirements of this role. So let's now look at some of the considerations from a fraud perspective. So in evaluating the severity of a deficiency for such instances, specifically in cases of fraud, the auditor should primarily consider two factors, which is that the likelihood that the deficiency will result in a material misstatement and the magnitude of such an outcome. So the auditor has to evaluate what is the likelihood of this deficiency that it will result in a material misstatement and what is the magnitude. Both needs to be assessed by the auditor to see what could be the implication on the reporting. And therefore, it calls for performing an assessment of the risk of material misstatement due to fraud and would consider both qualitative and the quantitative factors in assessing the deficiency or combination of deficiencies as a significant deficiency or a material weakness, and accordingly would require professional judgment. So the principles of SA 265 will typically be applicable in this scenario as well to see whether the instance of fraud, what is the likelihood of that deficiency occurring, what is the magnitude, and if it does occur, have the auditors considered both qualitative and the quantitative factors and determine what is the level of deficiency, whether it elevates to a significant deficiency or could it be a material weakness, right? So let's also look at now Rule 11G vis-a-vis the reporting under 143.1. So as we are aware, Section 143.1 requires the auditor to state whether the company has adequate internal financial controls with reference to the financial statements in place and the operating effectiveness of such controls. The institute did come up with guidance note on the internal financial controls a few years back when the requirement became applicable, and para 52 of the guidance note actually specifically deals with the expression audit trail and to describe the control activities in relation to policies and procedures related to information processing system. However, it does not entail any detailed audit procedures in respect of reporting under Rule 11G. And therefore, when the internal financial controls talk about audit trail, they were not anticipating a scenario where detailed audit procedures are required to be covered as part of the rule requirement of the Rule 11G. And therefore, there could be a scenario where the auditors might see that the controls, other than the requirement of the audit trail may be in place. And therefore, then how does the auditor report, what is the audit trail requirement vis-a-vis the internal controls over financial reporting? Has there been any breakdown in the internal financial controls? And what would be the auditor's responsibility? So accordingly, where the audit trail feature has not operated throughout the year, the auditor may need to appropriately modify his comment while reporting under Rule 11G, depending upon further testing as may be required to conclude on the wider impact of the reporting implication. So what is important is merely because the audit trail was not enabled or was not operating throughout the period, it does not mean that the transactions that were recorded were misstated, right? And therefore, the auditor has to consider the non-compliance with Rule 11G and see what is the impact, what is the wider impact of non-compliance, and see whether there has been a total breakdown of the internal controls or is it more restricted in nature, and what could be the impact. And therefore, then accordingly, the auditor needs to conclude. While he will still report on non-compliance with Rule 11G, but he needs to also assess what could be the overall implication when it comes to reporting on the internal controls. And therefore, the last paragraph saying it should be noted that mere non-availability of the audit trail does not necessarily imply failure or material weakness in the operating effectiveness of internal financial controls over financial reporting. So this is a key aspect, and this needs to be kept in mind when the auditors, conclude one, how the management or the company has complied with Rule 11G, and two, if they have not complied with Rule 11G, could there be a wider implication on the internal financial controls? Okay, so now that we have seen the requirements, how the management has to take responsibility of ensuring that those audit trails are enabled, we also looked at the auditor's responsibility. Finally, the auditor has to obtain written representations from the management. Typically, in this requirement, no different from other areas where the auditor seeks written representations from the management. Again, acknowledging the fact that the management is overall responsible for establishing and maintaining adequate controls, for identifying, maintaining, controlling, and monitoring audit trails as per the requirements on a consistent basis. Stating that management has performed an evaluation and they have assessed the adequacy and effectiveness of the company's procedures for complying to the requirements prescribed for audit trails. Stating management conclusion as set forth in its assessment about the adequacy and effectiveness of the company's procedures. Stating management has disclosed to the auditor all deficiencies in the design or operation of controls maintained for the audit trails identified as part of management's evaluation. Describing instances where identification of fraud, if any, resulting in a material misstatement to the company's financial statement is identified while reviewing and related to the disablement of the audit trail facility of the accounting software. And stating whether control deficiencies identified and communicated to the audit committee in relation to the audit trails during the previous engagements have been resolved, and specifically identifying any that have not been resolved. So the last representation is typically to confirm that any deficiencies that were reported to the audit committee in the previous years, how has the management dealt with them? Have they resolved those deficiencies in the subsequent period? If not, how did the management deal with such deficiencies? Right. So important that auditor obtains these written representations. Let's also look at what is the requirement when it comes to audit documentation. Again, the implementation guide is quite clear that ISA 230 requirements when it comes to audit documentation, that the audit documentation should be sufficient for somebody who, as an independent auditor, reviews the documentation, is able to arrive at the same conclusions that the auditor has arrived at. So the documentation should reflect that level of details and ensure that sufficiently captures the requirements of the of the rule and how the auditors have dealt with it. A sufficient and appropriate record for basis of the reporting under Rule 11G and evidence that the auditor had planned and performed in accordance with the implementation guide, applicable standards of auditing, and applicable legal and regulatory requirements. So the documentation should reflect all of these aspects as the auditors gain comfort that they had planned these procedures and they have complied with the requirements of the rule, the standards of auditing, and the relevant regulatory requirement. With that, we actually end the technical portion of the session. What I will do now is I'll probably quickly show you the terms that we actually used in the previous slides. What is an audit trail? What is a books of accounts? What is a service? Who's a service provider? What is software as a service? And again, all of these are included in the implementation guide. So again, my request is kindly have a look at these definitions which are relevant when it comes to reporting. Right. So what do we understand by audit trail? So there is a definition. I'll not again just read out, but I will just leave a minute for you to quickly go through what the term means. What is the audit trail? So let me move on to the next term, which is books of accounts. So as I mentioned, what is relevant for auditors to ensure compliance with will be those accounting software which constitute books of accounts. And books of accounts is defined in section 213 of the Companies Act. And again, I'm not going to read out, please quickly have a look at this. Most of you are already familiar, but need to ensure that what constitutes books of accounts will be what will be relevant from application of this rule. Accounting software. So we have been talking about accounting software that constitutes books of accounts. Again, the implementation guide has a detailed definition for that. So it has to be contextual. This accounting software should be recording transactions, is used for maintaining the books of accounts. The reporting is from this particular accounting software. And again, every organization will have multiple accounting software in the different accounting areas. And therefore, whichever accounting software constitutes books of accounts will be relevant for the compliance with this particular. So a service provider is an organization supplying services to one or more of the customers. So typically a payroll service provider. It could be some organizations outsource accounts payable, services to a third party. So all of these are service providers. Software as a service, whenever organizations, they don't want to implement, on-premise system, but they still want to leverage technology. So how do they do that? So they subscribe for a certain software. Organizations today will provide the software as a service, and the clients can, through a licensing arrangement, subscribe to those services, and they can leverage the software for their purposes of accounting. Yeah. So software as a service is quite a prominent feature today. Most of the organizations have leveraged, especially it helps organizations to scale up as the organization grow. So therefore, many of them find this to be a very viable alternative than to have a full IT setup on the premises and manage those IT systems. So with that, actually, we are complete with the technical session. Possibly what we can do is take some questions here, or we can run the multiple choice questions and then come back to the Q&A. So let's probably do this. We will go to the multiple choice questions and request you to mention your answers, and we will check whether the understanding is appropriate. So clause G under rule 11 of the company's audit and auditors rules 2014, which require the auditor to report whether the company has used accounting software for maintaining its books of accounts, which has the facility of recording audit trail, is applicable from. So it's April 1, 2022, April 1, 21. Is it April 1, 2023 or April 1, 2024? So members, what do you think is the applicability of Rule 11G? Thank you. Most of them have chosen A and or C, and some of you are also responding B. So the correct answer for this would be A, which is April 1, 2022. Please bear in mind that we saw the applicability for auditors and for the companies. The applicability of the Rule 11G for the auditors starts from April 1, 2022. Initially, the requirement was from April 1, 2021, and the rule was deferred. However, for the auditors, since the rule has not been deferred, while for the companies it has been deferred until April 1, 2023, for the auditor, the requirement kicks in from April 1, 2022. So in compliance with Rule 11G, the auditor is expected to check whether the audit trail feature for such transactions which result in a change to the books of accounts. So what are those that needs to be, what does the audit trail needs to capture? What data was changed, who made those changes and when? That the audit trails have been preserved from April 1, 2021. So do you think it's A and B, or is it A, B, and C? Thank you, members. Again, there are mixed responses. So the right answer would be D, which is that what data was changed, who made those changes, and when. Now, C, which deals with that the audit trails have been preserved from April 1, 2021. As we saw, because the requirement starts from April 1, 2023. So the preservation of the audit trail will also start from April 1, 2023. And therefore, C is not relevant. Right? That was intentionally, it was meant to mislead people. Right? And so the correct answer would be what data was changed, who made those changes, and when. So those are the things that needs to be captured in the audit trail. Company ABC Private Limited uses multiple IT applications for processing its business transactions. The main ERP where all the transactions are recorded. So SAP is the main ERP where all the transactions are recorded. Further, they have outsourced their payroll processing to XYZ Private Limited, which uses MyPay, which is the application. The company also uses AQPPE for maintaining fixed assets, which is hosted on cloud. Which of the applications should be included by the auditor of ABC to report on compliance with Rule 11G? So would it be SAP? Would it be MyPay? Would it be SAP and AQPPE, or is it all of them? Thank you, members. I saw a lot of answers saying it should be all the applications, all the software. Some of them also said A or C. So let us see what is the right answer. So the right answer is D, and that is because, as I mentioned even earlier, that the auditor first needs to determine what are those accounting software that will constitute books of accounts under 213. So the first requirement that the auditor has to ensure that SAP, the MyPay application, or the AQPPE are all accounting software. In this case, if you notice, MyPay is being used for payroll processing, though it is outsourced to a third party. Nevertheless, it constitutes books of accounts for the company. We also see that AQPPE is used for maintaining fixed assets, which is also constitute books of accounts. And therefore, all the three applications, SAP, MyPay, and AcuPPE, will become relevant. Yeah. So the auditor first needs to determine what are those applications. So typically the management has to give a list of all the applications that they maintain. What are the underlying financial reporting areas, whether they constitute books of accounts or not. Once they constitute books of accounts, they will be relevant for checking whether the requirements under this rule have been complied with or not. So in this case, all the applications will be relevant from a 11G perspective. I hope that's clear. Okay, let's look at the next one. The auditors of which companies are required to report on compliance with the audit trail requirements. Section 8 companies, foreign companies, companies incorporated outside India, companies incorporated in India. Is it all of them? Is it A, B, and D? Thank you, members. Again, I saw a lot of answers for F, D. So let us see what is the right answer. The right answer would be F, which means Section 8 companies, foreign companies, and companies incorporated in India. Now, companies incorporated outside India, the implementation guide specifically says that those companies that are incorporated outside India need not comply with this requirement, right? And therefore, only for that companies that are not incorporated in India, this requirement will not be applicable. Okay, the auditor should consider issuing a modified report under the following circumstances. Audit trail feature is not operating effectively during the reporting period. Accounting software is maintained by a third party and auditor is unable to assess whether the audit trail feature can be disabled during the reporting period. Migration from one software to other happened during the year and the auditor is unable to obtain sufficient and appropriate evidence. In all the above cases, the auditor will have to issue a modified report. The auditor will issue a modified report only in cases of A and C. So what do you think is the right answer? Again, thank you, members, for a very short, briefly, I did display the answer, which is D, which means in all these scenarios, we saw the various scenarios, what are the reporting implications, what are the illustrative wordings for each of those scenarios. So in this case, all these instances will, auditor has to consider issuing a modified report. So with that, we come to the end of the session. I'm happy to take any questions. The topic itself relatively is, evolving, but again, based on what we already know, in my experience as an information systems auditor, we have dealt with audit trails for quite a long time, but not in this context that each and every transaction has to be looked at. We typically used to look at from a privileged access standpoint, and whether for privileged access audit trails have been enabled or not. But this is a new requirement under the law, and therefore increased compliance is what comes through this requirement, and we need to still evaluate whether the clients have complied with it. So someone asked, give me a second. Okay, how to check whether Audit Trail enabled or not in SAP. In most of the ERPs, there are standard configuration settings that are available. Please take the help of the IS auditors, where they will be able to pinpoint what are those configurations where the audit logs will be enabled. And it is important that, as I said, it is not only whether the audit trail is enabled, but has it operated throughout the period, has it operated for all the transactions, also needs to be looked at, and therefore it needs to be covered in entirety. Thank you so much. What is manual books of accounts? Can preserving printouts of all ledgers and subledgers be considered as maintaining manual books of accounts? So manual books of accounts is nothing but the traditional way of maintaining books of accounts, which is that there would be physical ledgers. There will be a general ledger, there would be subledgers, there would be postings from the subledger into the general ledger, a trial balance being manually drawn, and then the financial statements prepared, the P&L balance sheet. However, considering the volume of transactions these days, it is very unlikely that companies can still maintain manual books of accounts, because the nature of transactions and the volume of transactions have significantly increased, necessitating an electronic way of maintaining books of accounts. So it has become almost I would say I have not seen manual books of accounts being maintained, at least by very large organizations. If the transactions are quite less, then there is a possibility that manual physical books of accounts are being maintained. Can preserving printouts of all ledgers, subledgers be considered as maintaining manual books of accounts? Not really. If the ledgers are being printed, that does not constitute manual books of accounts, because originally they have been maintained in an electronic form, right? And therefore, wherever the accounting software, the transactions were recorded, will have to be, that would constitute the books of accounts and not just the printouts. Okay, and therefore, if it has been maintained in a certain software from where the printout was taken, that software, if it constitutes books of accounts, if it is recording the transactions, then the requirement of this rule will be applicable. The audit trails need to be enabled. Are branches of foreign banks operating in India also subject to the audit trail requirement? We saw that there is, it covers all companies that are incorporated in India, and therefore branches would be those foreign, the branches, if they are foreign banks which are incorporated outside of India, they will not come under the requirement. However, if those branches are those of the branch which is incorporated of the bank which is incorporated in India, then the requirement will be applicable. Does it require to maintain real-time accounting throughout the year by small companies? Okay, so I will try and answer this question. Does it require to maintain real-time accounting? So the requirement under this rule is not suggesting that the accounting has to be real-time, but when the accounts are being maintained in an electronic form, the company needs to make sure that the audit trail feature has been enabled in the accounting software. So it is not emphasizing the fact that the accounting has to happen real time. Yeah, it can happen, the entries can be posted during the month end, throughout the month, in whatever manner. But if they are maintained in an electronic form and they constitute books of accounts, then it will be relevant, irrespective of whether it is a small company or a large company. So this applies, the requirement applies across all types of companies. How can we ensure that the client follows best audit trail practices and major steps as auditor we should take to assess the risk related to its best method? Okay, so the implementation guide actually gives enough insight into what are the practices that the clients need to follow, which means that the client's management takes responsibilities of ensuring that the feature of Audit Trail is present in the accounting software, it is enabled, it is not tampered with, it operates throughout the period, it operates for all the transactions, right? And therefore, this is the minimum requirement that the clients have to comply with. And as an auditor, if you ask me whether best practice, or the practice is already defined that all the transactions have to be recorded, and therefore that needs to be complied with. So the auditor in this case is reporting more on a factual basis, whether the company has complied with this requirement or not, right? So again, we should suggest to the company that this is the requirement under the rule. And as long as the books and records in the accounting software, they constitute books and records, the audit trail needs to be enabled for that. Will opinion on the audit trail form part of the independent audit report, ICFR, or separate report like ICFR to be issued? Well, we saw that the requirement is mentioned under 143(1) of the audit report, and therefore it will form part of the independent audit report.
Hello. Hello,
Hello.
Sandeep sir.
Yes.
Yeah, we can ask attendees to post their questions afterwards, or they can connect with you, because we have our next session speaker with us. They have already joined with us. So
Absolutely.
I think so. We are already. Yeah.
So what we can do is maybe we can compile these questions, and as much as possible, I will try and address that. In the interest of time, I've tried to address some of them. But thank you all so much. I think this is an engaging session, a lot of questions. I know this is a new topic, and as we mentioned earlier, that there is no global experience. There is no experience with any of the other auditing bodies, and therefore we are evolving this. The subject itself is quite evolving, and therefore as auditors, we need to exercise good judgment. The rules are quite clear, what is required to be complied with by the companies. And as auditors, we need to make sure that we ensure compliance with these rules and apply our professional skepticism and judgment wherever required. Thank you. Thanks to all the members. Thank you once again.
Yeah, thank you, sir. CA Sandeep sir, thank you so much for taking out time and sharing your knowledge with us on the very recent topic, which was the need of an hour. So thank you once again, and thank you our CA Arpit sir also for keeping such an insightful session. I hope everyone would have benefited from this session. It was truly an insightful session, sir. Thank you everyone.
Thank you once again.
So moving forward, I would like to session speaker, CA Punit Mehta sir. Welcome, sir.
Yes, thank you.
Yeah. I would like to introduce our today's second speaker, he'll deliver on the session topic of Audit Trail in Tally Prime.
Yes.
So if I go ahead with his this profile, he's a co-author to the book Tally for Professional, published by WIRC of ICAI in 2019. He has also developed a fully integrated module in Tally for builders, for CAs, shipping CNF agents, and schools, colleges, etc. He has also addressed various sessions in study circles and branches of WIRC. He was also a co-opted member of Digital Accounting and Assurance Board of ICAI for 2019 to 2020. He was also a founder member and currently treasurer of Jain Chartered Accountants Federation, Mumbai. He is also a convener Mumbai Central City Study Circle for 2021 to 2023. And he is a committee member Technology Initiative Committee at BCAS for 2021 to 2022 and 2022 to 2023. So the stage is all yours, CA Punit sir. So please carry on the session. Thank you.
Thank you, Sharon, for that lovely introduction. And thank you, Sandeep sir, for that insightful discussion. I had joined little earlier than the designated time just to listen to you, and I'm so happy that I was able to listen to you. Is my voice low? Let's see. Yeah. How is it right now? Is it still low or it's manageable? Sharon?
Yeah, it's way better.
Better? Okay.
Yeah.
Thank you. So must compliment Sandeep ji on bringing out such vast inputs on a subject which is very, very new. And let me see how we can start. Okay. Is the screen visible?
Yes, it's visible, sir.
Fantastic.
Go ahead.
Right. So friends, let's straight away get down to the business. These things Sandeep Bhai has already mentioned, the MCA notification, and essentially what is required is audit trail of each and every transaction, creating of an edit log for each changes made in the books of accounts, along with the date when such changes were made, and ensuring that the trail cannot be disabled. Okay, so these are the three critical points Sandeep ji has explained to us in detail, and this impact is supposed to start for the companies from April 1, 2023. Okay, so what does the tally suggest? Because we've already got the subject matter as to these are the things which is there. Now tally is suggesting that if you are using a tally prime software, or if you are using a tally ERP9 software, then you should move to tally prime. And if you have got MCA requirement to comply with, then you will have to move to a software called tally prime edit log. Okay, what does it give? It these are the things that they are providing, that the edit log from the day one, you will be able to maintain the trail. Now I will get into the details of it, but if you wish, I will just go to Tally's website. We go for download. There is an option called Tally Prime Edit Log here. So you will have to download this version. There are two versions: Tally Prime Normal, okay, that is 2.1. It doesn't comes with this EL edit log, and one with the edit log. Okay, so you will have to install Tally Prime Edit Log in your machine. Do you need to pay extra? I guess no, because all the license holder who has got valid active TSS, that is Tally software subscription, would be able to update it. Now for those users who are using earlier Tally software, that is Tally ERP9 or Tally 7.2 or any other earlier version, they will have to migrate their data in case they wish to comply with the Tally MCA compliance listing, right? So this is the first thing that you need to take care. Once you update your license, so you don't need, while you don't need to pay extra, you will have to download the EXE. The suggestion is that you can use both Tally ERP9 as well as Tally Prime. Let me share my screen with you, desktop. So this is my desktop. We have got Tally Prime also. Tally Prime Edit Log as well as Tally Prime. So both the options can run together, but for the companies which are used, which have been opened in Tally Prime Edit Log, they will always have to use this teleprime edit log only. You cannot switch for a company that today you are working in teleprime edit log, tomorrow again you go in normal teleprime. That is not possible. Okay, you will have to operate it in a single company, a single EXE for a company which requires MCA circular to be complied with. I hope I'm clear with that. Any questions for the version? Yes. So friends, if you see, the tele software comes once the software, I have started this teleprime edit log. There are companies which is asked that whether migration is to be done, or and here there is no migration which is required to be done. Okay, why is it so? Because in this company I have already migrated once. Okay, teleprime I have already migrated it in teleprime edit log. So if you have already migrated, you will not be asked for that. And if you have not migrated and you are planning to select the company, then it will ask for the migration. Like this, let us take one example of migration. Okay, and after that we will see within the tele software what are the aspects. So Apex Electricals, I will just put, it will ask whether you wish to take a backup. Yes, I wish to take up the backup, and I have migrated. That's it. Okay, so from teleprime to teleprime edit log, now I have migrated this particular company, Apex Electricals. Let me check. Alt K, select the company. Yes, Apex Electricals. When I have opened it in, yes, when I have opened it in teleprime edit log, it is now not asking for the migration because it has got migrated. Migration, what they are essentially doing is ensuring that all the data which is of earlier version is now tagged with the teleprime edit log. Now, what are the important aspects of teleprime? I will just show you some of them. Yes, Shavla, you can use both teleprime and teleedit, but for two separate data files, not for the same data version. Shreyas says, if we select EL version for partnership, can we not go to normal version? Yes, we can, because there the trail is not required. Sandeep says, explain again. I am not sure where you had asked this question. Do we need to download tele edit log if we use teleprime? Yes, Devendra, you are very right. We will need to download teleprime edit log. So as I had mentioned earlier, we will have two EXEs, one for normal teleprime that you can use it for those companies where the MCA requirement is not there, and teleprime EL edit log. If you see on the left hand side, this version is there for those companies where the edit log is mandatory. Okay, always you will have to open in the two companies. Okay, so what do we get when we, let me show you this particular aspects. So I have logged in with the username A. Okay, so in Alt K company screen, it shows that edit log. So it shows that on 1st October, I had moved to teleprime, company data moved from teleprime to edit log. And on 11th November, I had moved to normal teleprime. And today I have again moved it to the Teleprime edit log. So it is giving me the complete trail of the activities affecting the edit log. So this will happen with you also. In case you have opened the company in normal Teleprime, there will be a log, and the auditor will have to report that this company was not available in edit log for such and such period. Okay, so this is what edit log is. First and foremost option is that it will record that when the company had moved to the edit log version, and in case it has again moved to the normal version, it will record that as well. Okay, does it record the transaction when it has moved in the normal version? No, it doesn't. Okay, but whenever they have come to the edit log, it will record what transaction it will show. Let us see once again. Raju says whether entry delete is allowed in Tally under this audit trail scenario. While entry delete is not a challenge, we will see display daybook. Now this is the transaction. Okay, professional fees has been charged for 52,000 rupees, and I on 28th of Feb 21. This is the transaction date. And I have clicked on spacebar and Alt D, delete the selected version. So will the trail allow to delete? Yes, the trail will allow to delete this in case you have the user rights. But how would the auditor ensure that the deleted transaction has got recorded, or what was the deletion which was there? Because in Teleprime edit log, the critical thing is that you need to know that there was some deletion and what was that deletion made, because that is what all about the trail is. So you can go to Control B, basis of value, and see here altered vouchers. Okay, show include deleted vouchers. Yes, and Control A. So it shows that the voucher was deleted, and if you enter inside on this thing, you will get that this transaction was created on 1st October and now it has got deleted on 30th March. The username is there, A, and the date and time when it was deleted. So why is not there, when is there, and who is there, and what was the transaction? This, by clicking on enter, you still come to know that this was the transaction which was deleted. Okay, so this is very critical to understand that any deletion wherever happen will be recorded in Teleprime. So date, whether the date of entry in Tally or a real-time date, I have already shown you that this transaction was deleted on 30th March. So this is the real-time date. Okay, this is not the transaction date. If you want to go inside and see the transaction, it will show you that this transaction date was there on 21st of yes. So all the details are there. F12, show internal fields updation also. Yes. Okay. Yes. Sudeep says, does Tally Prime Silver support? Yes, all the licensed version will be supporting, whether the silver or gold, whatever it is. Paresh bhai, I'm not sure whether the license itself will work if we backdate the system, because the license and the system date is again connected with the Tally server. So I'm not sure. Saurabh says, can we export this in Excel? Not as of now, maybe little while later, once people start using it, we will come to know. Okay. So right now they have not given for Excel export or for print. Right. Right. So let us see that if a transaction is modified, so this transaction, if I have modified, how do I check? Okay, so how do I come to know that what was the modification made and when was that modification made? So when I have to go into the transaction and I have to click on button called Alt Q. So earlier transaction, what was it and altered on 30th March 2023? Enter and you get the details. So by clicking on Alt Q, you are able to get all the details of what it was. Okay, what the transaction was, where it was. So all the details are there. So version 1, version 2, version 3, version 4, like this you will get the list, and the latest version would be there on the top. Right. So I'll take a question little while later, but first let me just finish the presentation because we are already late. Okay. So this is how you get it. Now somebody asked that would this be available for the masters also? Let us go and check. So I'm altering a master. I am just giving this Ajanta transport, and I will give the name Ajanta Transport to Ajanta Transport India. Okay. No other change was made. I have changed the ledger name and I have saved this transaction. So let me check. How do I see what was the version? Enter and then click on button called Alt Q. Alt Q, and here see. Here you get the option that the name was changed, the ledger name was changed from Ajanta Transport to Ajanta Transport India. Okay. Now friends, when we are talking for the ledgers, we have two options. One is the normal changes, maybe the name changes or maybe the balance changes. And sometimes there is a configuration changes, like the configuration changes is maintain bill by bills as yes. Okay. So if you wish, you can also see that changes. I have now activated changed the bill by bill detail. Okay. So these changes is also available. So if you see, is billwise on, the version 2 was no, version 3 was yes. So it is capturing all the details which is required. So it is not just changes, but adding of certain functionality also. Sometimes inventory value, yes, no, or sometimes other options are there. So like that, all the things are getting captured. So version 2, version 3 is there. The first version was this. Okay. What next? So you will ask that in case I have to track all the changes which has been made in the masters right from the day one when audit trail or edit log was activated. So in which report can we go and check it? Okay. Any suggestions from where we can check all the masters? Yes, Ravisha, I am asking the precise question. While we get this report for all the masters through the audit trail, but from which report? In Tally, there are multiple reports: balance sheet, profit and loss account, chart of accounts, statistics, trial balance. From which report can we get this thing? Any suggestion? Edit log, there is no separate report. Shubham, there is no separate report. Swapnaja, yes, Swapnaja and Bhagwan and all the others who have mentioned chart of accounts, you are very right. So we'll go to chart of accounts, ledgers. So in chart of accounts ledger, just like day book that we went for, control B, basis of value, show report for altered, non-altered or only altered. Include deleted ledgers, yes. So here we get that only 3 ledgers were modified, and if you go inside each of them and press Alt Q, it will show you the details. That currency name or is security when entered, that was the change for this activity. Airtel Mumbai. For Ajanta Transport, we've already done 3 changes. So here it is showing for the 3 changes for Ajanta Transport, Control Q and HDFC Bank account. So here also we have made the changes, but so there are multiple changes which has happened, 1, 2, 3, 4 like this. Okay. Right. Fantastic. Alt Q is the option. Whenever, whether in the individual master, you have to show Alt Q, and in case of day book and chart of accounts, Control B, basis of value. These are the 2 important reports which has been added. Okay. Now let us take some FAQs. Will the user be able to disable the edit log capability in Tally Prime edit log product? The clear and concise answer is no. The MCA notification is very clear that you should not have that capability. So it will not allow to disable the edit log capability. But for the users who do not fall within the purview of MCA rule, they can use the normal Tally Prime product and may choose to enable edit log capability for internal purposes. But if you are using edit log exe, definitely you will not be able to disable the edit log capability. Right. Can the users compare the selected version? We have already seen that users are able to compare the selected version. And if you wish, you can press plus and minus on the keyboard to move up and down for the previous and the later version records. Will data size get impacted having the edit log for each and every modification? The logical answer is yes. Why? Because earlier Tally was not keeping track of the modifications that you are doing, but now it is keeping track of each and every change. We just saw that whether bill wise detail was done, yes, no. That also change was considered. It is not that the change in name or change in the amount or change in the narration. It is change in any change which is made in the master or in the transaction. So it is going to add certain data sizes, although very small, but definitely it is going to get impacted. So we've seen edit log for ledgers, ledger group also similar, and stock items also. We've already seen this flexibility to report, filter report based on altered and deleted transactions. Let me delete a transaction. We've already seen, actually, that was the first thing that we saw. So you get when the transaction was deleted and which version are we working on. Okay. Track edit log for the company data migrated from previous version release. That also we saw, Alt K. And you will get the complete details of the version. Okay. Now some other FAQs. Yes, Mansi, the auditor can check from which date the company has implemented edit log facility, and before the implementation date, no data would be available because that was there in the earlier sim. Okay. Whether we get the log of edit log disabled, that's what the first thing, Shashank Bhai, I have mentioned, Alt K. That is the option. I will take it once again. Alt K, edit log. Here we get the details. When was the edit log? What was the activities which has been done affecting the edit log? Okay. Will data be compatible with the previous release after moving to the new release? No. Once the data has moved to edit log, you cannot go back to the earlier version and say, okay, I don't wish to it. You will have to move forward, or you will have to rewrite the data. That is not preferred. I would suggest that you migrate only if it is required to be migrated. Okay. Will the edit log data be retained when the company is split? Edit log data, not the entire daybook transaction data of which transaction was deleted or whatever it is. Yes, this again would be retained in the Alt K screen, edit log information that the company was created on such and such date in the edit log version. So that information would be available. Can edit log be completely removed or deleted record by record? No. Once you have activated it in edit log, you cannot remove the log functionality. But if you again enable it in TelePrime normal, yes, at that time you may be able to, or rather you are able to erase the edit log data. Many times users are using synchronization or import functionality. So here we have Paresh Bhai for reducing his workload. Paresh Bhai normally uses a tool to import the transactions from Excel. So would edit log capture that tool also? The information from that tool? Yes, it will capture the date on which the import was made from the user login who has initiated that import transaction. So that is also very much possible. But it will have the status of sync or import accordingly. What all information gets captured in edit log? So this is already we have seen version history of vouchers, masters. Okay, will be tracked various activities as per data level when it was created, repair or anything, that also is being tracked, and it will be shown at the voucher master and the reports level. Okay, these are all the information which will be available in the edit log. Can customization of reports be built accessing edit log data? Yes, new reports can be built using edit log data. You can ask your tele vendor whether they can customize it for the purpose of your viewing it. But mind you, you will not be able to modify. You will only be able to derive the information more clearly if you wish to, okay, for the masters as well as transactions. So some of you might be using browser for edit log. the current scope is not available for Tally Prime remote access browser. It is not available. The edit log version cannot be seen from the browser. Will the edit log be backed up and restored? Yes. The edit log, if you are taking a backup, then entire edit log will be backed up and restored along with the entire data. Okay. What will happen to the existing edit log once we disable the edit log feature in Tally Prime? So in Tally Prime, you can actually activate normal Tally Prime. I will just go and show you the normal Tally Prime also. So friends, I have just started one company in normal Tally Prime. So this is the Apex Electricals 1920 company. This was not opened in earlier Tally Prime. Okay. So I can go here, Alt K, Alter. So in this, if you have to activate Tally Prime, in option F12, you set edit log applicability. This option you will not get in the edit log exe. This you get it in the normal Tally Prime only. Okay. So here you can allow activation of any edit log. Enable edit log Tally. Okay. Yes, no. So in normal Tally also you will be able to activate or deactivate it. But mind you, MCA requires that the trail should not be deactivated. So it would not be wise for the private limited companies or limited companies where MCA circular is applicable to do this thing. For them, the separate EXE is required. I'm just saying that in case you are having a single EXE and you wish to activate edit log for maybe partnership or private limited partnership or proprietorship, and you wish to use this functionality, you can use it. Okay. Enable edit log. Right. Closing entries for 22-23 is pending. Yes, Jaideep, we can migrate it to the normal Tally. No, not a problem, because all the functionality of Tally Prime is available in Tally Prime edit log as well. Okay. Saurabh Shah says voucher is not modified. Can the date on which voucher was entered be identified from the software? I guess yes. Created on date is there. The date of transaction is there as well as the created on date is there. Let me show you. So this is normal Tally, edit log Tally Prime. I'm just passing one dummy entries. Display debook. This 100 rupees Alt Q. So on 30th March, this transaction was created. Okay. So you have this data created on date. And when you enter it, you get on which date the transaction was created, 28th Feb. Okay. For 28th Feb, it was created. Sorry. Okay. Can the same data be allowed to access simultaneously from two different products, Tally Prime and Tally Prime edit log? No. The same data cannot be allowed to access simultaneously or otherwise. So it is better. We have already answered this question. Tally Prime, many of us are using it on Tally Prime AWS. Will this version be available for them? Yes, it is available for AWS servers also. Some of us are using Teleprime server to ensure better productivity. So yes, it will work for that product also. Okay. Acha, if you have already customized certain masters, will this modification work? Teleprime edit log functionality would be working for the customizations also. Yes, it is considered as an alteration and captured in the edit log with the TDL names. Okay, right. So this was all about Teleprime edit log. Let me check Q&A. One second. Bhavin says Teleprime allows to post backdated entries. How to establish internal controls for backdated entries in case of small companies? Bhavin, you have to activate Teleprime security functionality. I will just show you how you can do it. You have to go out here, Alt K, users, and first is prepare a password policy, or rather activate the security. From where do you activate? In this, you have to activate in the company creation screen, you have to activate the administrator name. Once you have activated the security control, then in Alt K, you will find these three more options: users and password, user roles, and the password policy. But what is important is the user roles. So in user roles, you can provide the details that what is the days allowed for backdated vouchers, 7 days, 10 days, and what is the cutoff date for backdated vouchers. So you will not be worried about that one in case you have put the date as 30th September or 31st March 2023 after 3 or 4 days, then no entries before this date can be entered by this security level, data entry security level. And how do you correlate the data entry security level with the users? With the other option is this Alt K, user roles. So data entry, not user roles, I'm sorry, Alt K, users and password. Here you can provide that this is a data entry operator, that C is a data entry operator. Okay, this is the user roles and the password that you can provide. Okay, so this is how you can activate the security control post backdated, ensure that the internal controls are activated. If budget is also maintained in software, audit trail is compulsory. Yes, of course, Hardik, there is no reason why it is not. Hirav says, any exceptions of applicability of audit trail? I think Sandeep Bhai has already answered those questions. I guess not. And whatever the exceptions are that he has also discussed. In data migration from ERP to Prime, does the audit trail earlier years will be available? No, dear. Audit trail of earlier years will not be available. Madhvi, I think this is for the organizers to answer, but I guess yes. Okay. Okay. Can we demonstrate that no user can disable edit log? Alok bhai, or we just mentioned in our documentation that a Teleprime edit log is used. I guess Teleprime edit log comes with that functionality that no user can disable the edit log functionality, because in the edit log functionality, when you go and alteration screen, there you will not find that edit log functionality is activate, deactivate. So once you have opened the version in this Teleprime edit log, there is no option to deactivate it. Nowhere this option is there to deactivate the edit log. Ramesh bhai, not the relevant question right now, but still I would answer. It is not supporting it currently, but I guess people are working. Maybe in some time they'll be able to bring some options of this. Jairaj says multiple branches, group accounting in Teleprime. Will the trail be effective all branches? Depends, Jairaj. Aapne in which companies you have activated this Teleprime edit log. If you have activated for all the companies, yes, it will be impacting all the companies. But for 2 companies, you activated Teleprime edit log, and the other 4 you are using normal Teleprime, then there is no way where the trail can be kept for all the companies. Right. Any other question that I might have missed out? Do let me know. Okay. Anika says whether any report is generated for all the edit, deletion or transaction through Audit Trail. Okay, Anika, I think you missed out, or maybe I will just repeat it once again, that if you wish to know which transactions have been edited or deleted, you can just go to display daybook, select the entire period and Control B. All vouchers, show report for altered vouchers only. That's it. And if you wish to see deleted vouchers, then this is what it is. So these are the transactions which has been edited or deleted. Okay, here you will find that there was a transaction which was deleted also. So created and deleted when it was deleted on 30th March. And same way here you will find the changes which is required. You will have to go in each of the username and check it. Okay, for modification you will have to go, but for getting the list of transaction you can get it from daybook, and for the masters from the chart of accounts. Prakash bhai, in case Teleprime, MCA circular is adamant. Last 2 years we have seen that they, at the last date they are moving and enhancing the limit of applicability. But if they have not made applicable, I guess they will have to discontinue Tele ERP9. If the person opens edit ET data in normal version and after this EL data, okay. Shreyas, if the person opens for 2 days and then, as I said, there would be log which would be available for these 2 dates, which the edit log was not active in this data, and the auditor will have to report it in such scenario. Romi, I guess Tele license itself will not get activate if you change the system date. The moment you start Tele EXE, it goes and checks it's on its own server. Okay, whether the date is right, whether the date of system is right with the server date or not. So maybe you will not be you will not be able to open the EXE itself. Okay, the license would go into educational version. That's what my hunch is. I have not tried it by changing the system date. Okay. There could be many things. I'm not sure. But even if you make the changes, edit log, you Bhagwan says accessing the data through 2 different licenses has effect on compliance of Audit Trail. License is not the problem. EXE is the challenge. So if you access, you have Tele edit log at you as an auditor has it and the client has it. The same data is backed up and restored. Absolutely, there is no problem. Nothing would be mentioned in the trail. But the version, the EXE is the problem. Okay. How to trace the log option once enabled and then disabled in Teleprime by using Alt K, Khushbu. Both are EL, then absolutely no problem, Bhagwan bhai. Can client start using edit log version anytime in April? Now that is for you to decide as an auditor what note you are going to put, because the software is available and the compliance is supposed to be made. You can provide that from this date the compliance has been made. Sukrut, I have not worked with the options that you are saying. Maybe.
Sir, I think we should conclude here.
Yes.
Yes, because questions are repeating.
Okay. Right.
Thank you so much, Punit sir, for sharing your valuable input through practical approach and FAQ on audit log and audit trail on Tally Prime, giving your valuable time. It's really wonderful and incredible session, sir. I think Control B, Alt Q, and Alt K are the best best versions of Audit Prime.
Yes.
I'm thankful. Yes, sir. I'm also thankful to our dynamic young WRC Chairman Arpit Kabra, sir, Treasurer Ketan Siya, sir, for organizing such an insightful webinar. Actually, we got a very less time, Punit, sir, for your session. And this is our need of time. And I am also thankful to CA Sharon for coordinating this event. And I'm also thankful to all participants for their sincere learning and giving their valuable time. Thank you, all of you. Thank you so much for making this webinar a successful. Thank you so much, sir.
Please get connected once again in case you have any need. Do feel free to share your thoughts or inputs. I have also learned something or the other new. So it's always wonderful to be there on the WIRC platform. And many thanks to Arpit and his young team to organizing such fantastic version in such a short time. Thank you.
Yes, sir.
Yeah.
Thank you so much.
Thank you, CA Nilasha. Thank you, CA Punit.